Hey, Happy New Year, and real quickly wanted to do an update on gold. Gold, today was our 13th day in a row with higher highs and lower lows, or excuse me, higher highs and higher lows, also known as one time framing. So we have been going higher every day for 13 days in a row from 1238 on the 12th of December. Today we traded as high as 1320. So we have gone up 82 points. 82 points divided by 1320 today is right about 6%, a little over 6%. So we've had a 6% move now in gold, and interest rates have actually gone lower. Bonds had rallied during the same point. So this technically has nothing to do fundamentally with what's going on in the world. But what I want to put out here is before this will be bullish in my camp, we need a weekly, or rather a monthly at a minimum. We need a monthly close over 1362. And the reason I say that is 1358 has been our monthly high close in the last 3 years. We are now very heavily leaning towards the commitment of traders show mostly the large specs are long. It's not the highest it's ever been. It's not the lowest. It's somewhere closer to the high end of the range than it is lower. We talked about this earlier. Volume was shrinking, and then the last day of the year we kind of peaked up a little bit when we sold off a little bit there early in the morning. And then today we hit another new high with even lesser volume than we saw at the end of the year. So I see a lot of distribution continuing in gold, and I just want to point out that until this closes over 1362 in my book on a month end, so that would be January 31st, today is January 2nd, or February 28th, or March 31st. The best situation would be March 31st closing over 1362. If we do that, and that's 90 days away, then we are off to the races in gold, and we will see higher prices for the remainder of the year, most likely. Now, if we don't close over that, I'd say you're better off situated watching what's going on in crude as a picture. I think most of this is jumping the gun, inflationary jumping the gun, and that we really don't have inflation. Matter of fact, I would argue that right now we've got kind of a different situation where the only reason why we're going higher is the dollar has been getting pushed lower. So the end of the world trade, the dollar bulls, I think need to get trapped here, and that is clearly what's going on. And I think once you see oil over the next 3 months also play out, gold has been following too closely oil, and I think that's going to come to an end. So let's talk about oil a little bit. Oil, until we close over 62.50, can't make a run for 100 to 110. Oil right now has, and I'm going to bring this up, I want to bring up the Commitment of Traders report. Oil has the largest commitment of traders long the crude contract than any time in history. This, the speculation, the large speculation side. This typically does not play out to be a good sign of health and well-being for any of the futures products when you have such an extreme. In other words, you would need to find not only more buyers speculating to the long side here, but you would need to do it pretty quickly, because we now have never seen a level as we have been so high. Right now we've got over 632,000 specs, okay? And you can see it here in the chart. 632,161 speculative longs in the market after we've gone from 42.5 up to just shy of 61, $19, about a 50% run that we've had in crude since the half end of the year. The other thing that you notice, and that again works out to be about just shy of $20, we had a move quite considerably, again, that I could see us maybe getting to 62 area, but I don't see us having a monthly or a quarterly close over those levels. Until we do, I'm not much of a believer in oil also in this sense. So I think as we approach that 62, 62.50 level in oil, and we may not even see it, but if we do, that would be an area that you're going to want to watch closely to see how that behaves and how gold then correlates to that. I don't. I think if you've got a longer time frame and can be patient, you can either, number one, we've been up for 3 weeks in a row, and we'll see what happens. But again, these are your key numbers. You need a monthly close over 62.5, I think, to get more oil longs added onto an already all-time high. Again, 632,000. We haven't seen this level. The last time we were close to this, we were about 556, and that was here in March. And from March, we went from 55 the next couple months down to 42, which saw our low. So here we are again, all-time high, and we're at all-time high prices for the last 2 years, not quite 3. Again, we need to take out that 62.50. Don't forget that our high here was 62.58, and that was May of 15. So that's 3 years ago come this May, and we doinked around there for the better part of 2 months. You can see there was 8 bars here. And until that can be taken out, which will take some time because that was 8 weeks of trading that took place there. And that range at that point, again, the low was 56.51 and the high was 62.58. So there's your bracket. We're right in it right now. We are in the middle of that 56 to 63 range as we trade at 60.38 on the close today. So back to my original thoughts. Let's watch crude. And let's watch gold, how they react here. But I think you've seen these end-of-the-month thin moves at the end of the year that really, a lot of people, I think, anticipated a move lower. And I think they will be right. But they needed to get this move to shake out all the longs. So they shook out all the shorts towards the halftime of December. And now what they're doing is they're spending their time shaking out all the longs. But if you look at the big picture here, not much has changed. And I wanted to point that out today. Happy New Year, January 2nd, 2018. And we will be back next week in full force here at the 1 Minute Trader. And we hope you have a great day.